So the trade that I royally botched today was AEI. Pretty sweet breakout chart, as we talk about all the time in Huddie&Dom. It all starts with looking at the volume, making sure that this thing is trading abnormal volume to what it's relatively trading. I.e. saying that it's in play. Further from that, I'm looking at the daily chart and I'm looking if there's any big key resistances that seem like extreme volume and where they are relative to the breakout. So in this circumstance, I would consider the breakout to be 72 cents, which is the high of this ticker, of this candle right here, 72 cents, which is the last big volume day created, and it topped out. And then if I'm looking back at the chart to find the next key resistance, the next key resistance is going to be this big volume candle up here in the threes. And I think we could safely say, my general threshold is I want that next key resistance, if there is one, to be at least 70% away from the next key resistance. So 72 cents is 70% away from $3.20. So it definitely qualifies as a chart that I think has room to run, or statistically can run well. It still might not, but I know it falls into a grouping of stocks that the odds are at least in my favor that this one could do well. So that's the first thing. I kind of qualify the chart, and then I look at the market cap, and I saw that this stock had something like 100 million shares outstanding. I generally look for less than 100 mil market cap for stocks that I like to play. The lower the market cap, the more spikeability a stock has. The lower the shares outstanding, the less supply. So, if you have overwhelming demand, then you're going to have increase in prices, economics 101 type idea. So I like to focus on those smaller share count stocks. So 115 million shares or 100 million shares outstanding, whatever it is, times the price of the stock is going to be your market cap. So again, I look for under 100 mil. That doesn't mean like that's my sweet spot, but that's what I look for. So 100 million shares outstanding times 72 cents, which is the breakout level, is roughly a 70 million market cap. So it definitely qualifies for that criteria as well. So we got a good market cap. We got a good daily chart in terms of spikeability. The last piece is kind of focusing up on the action that's happened recently. And we can see that, the stock has been a runner lately. It had this interesting breakout over 52 cents, which led to a, nice spike towards 72, where it eventually topped out, right? And then ever since that top out, it came back and held this previous level quite well. And that's what you want to see. You want to see stocks hold their levels. You don't want to see the stock go from 70 to 30 and then back up to the breakout level. The reason being is, if the stock travels a far distance from the lows back to the breakout level, then, your normal retail trader isn't going to want to chase the breakout, so to speak, right? They're going to say the stock already had a 100% move. How much more can it go? But if the stock consolidates in a very consistent and succinct way near the breakout level, then a lot more traders are going to say, hey, this stock is not too extended yet. Maybe I should buy this breakout. And that's the kind of interest I want in the stock. Of course, I still don't want to be the guy chasing the stock. I don't really want to buy 72 cents. So I'm kind of watching it as it's perking out of this consolidation area, saying, hey, that held the level really well. It's totally still intact. What might make this stock get back to the breakout level, right? And the last piece of information I needed came on this day right here, where you have the ever most slight gap up. The stock closed at 55 cents, then opened up at 58. So, not a big gap up, but a gap up nonetheless. And I wanted to know why. I've been watching this stock and I just didn't see a reason for this to gap up just purely based off the chart and technical analysis. So I went into the fundamentals, and this is something called a Form 4, which is, someone acquiring a big amount of shares in a stock, in a company. And on this Form 4, it said that the CEO of the company had bought, I think the numbers were 1.9 million shares at 55 cents and 1 million shares at 50 cents. And the dates were April 1st and April 4th. So quite literally on this day right here and on this day right here, these 2 days, the CEO himself was acquiring shares. And that makes me think, why is the CEO acquiring shares? And oftentimes, when someone buys millions of dollars worth of stock, it's because it's probable to think that the CEO has belief in at least a shortcoming catalyst or belief in their business operations. Why else would he buy millions of shares of stock? Maybe there is an ulterior motive that's terrible. I can't say for sure, but in my mind, I do treat that as a vote of confidence that, it's not just me buying the stock, it's also the CEO. And I don't know why he's buying it, but I know he just bought 1 million to 2 million shares at roughly 55 cents. And right now the stock is opening up at 58. So that is a good catalyst in my mind. The stock being bought by the CEO to the tune of millions is a positive catalyst to some degree. And I'm seeing in the price action that the stock is reacting positively to it. You can see the volume comes back in. We do have that nice gap up. And we're in shooting distance of this big breakout level that actually might bring more retail traders that, didn't see it initially, but now want to chase it higher, today. So, when I saw that news and I saw the chart and I'd been aware of it, I started taking positions. So I'm going to change from a daily chart to an intraday chart. So this is just the past 2 days right here. And you can see this is the small gap up from the previous action. This is the previous action that just kind of closed sideways. It gapped up. I looked at the news. I saw the CEO has been buying in this area. So I started to consider that this day was very important in terms of its overall trend. And I wanted to get a good risk reward entry. And I understand my risk right now, if I'm using the chart, I got 55 cents, I got 50 cents below that, and then I have whatever levels we make from today on significantly more volume, which means I'm going to trust these levels a lot more as significant than these levels, right? So, throughout the whole day, I'm being very patient. I'm saying, hey, it's not broken out yet. It has no real reason to get there today necessarily. So I want to accumulate. I want to get in long at 60 cents where I think the stock is basing, and I can give it some wiggle room. It could go below 60 cents in this moment, and it could still be fully intact. So I'm just slowly building in on these dips, building in, across VWAP. And I eventually get like this 62, 63 cent average with a lot of shares, with hundreds of thousands of shares. And the idea is I have really big size in this stock, and I can eventually move my risk to 60 cents and say, hey, my risk is really tight. And by the time this breaks out at 72 cents, which is this red line that we draw earlier, I didn't want to get rid of it, which is this red line that we drew earlier from the daily chart. By the time we get to the breakout level, if I have a 60 cent average, I'm already in like a 1 to 2, 1 to 3 risk reward scenario. And then I don't have to touch it anymore. I can allow retail, chasers to buy the stock up, push it further, and really capitalize on a nice risk reward trade. Not necessarily needing to nail the top. Don't really care if this stock is going to a buck or not. Just saying, hey, where does the risk reward make sense? Where does the entry make sense? Where does the thesis stay in contact? And all of that kind of built into me getting a really nice position with a lot of dollar size and very limited risk for that amount of dollar size on the stock. Where I botched it eternally and will never forgive myself for doing so is this silly little 10-minute pull. I literally sat in this stock all day yesterday, being very careful on my ads, making sure that the risk was intact and that I was building in consciously and respectfully to what the stock is. And then we have a 10-minute ugly open, and it doesn't even break 60 cents. This red line is 60 cents. For whatever reason, I had moved my risk to the 62 cent line, which had held intraday. But even then, I saw it hold intraday, I knew it wasn't a solid level. I knew 60 cents was very solid. It was the breakout over the morning range. It was what held on big volume in the morning. I figured that was pretty key, and that's what I was sizing into. For whatever reason, last minute, I decided to change it up and set a stop loss right at 62. So yes, this low of day right here are my sell orders going through. Very upsetting. I took the loss right there, only to see it rebound and do exactly what I expected. So a lot of information there, but I think the most key thing to pick up on is how the trade thesis formed. Kind of watching this price action, seeing these higher lows form and seeing very healthy action. Doing my best. It's a fine line between getting spooked out on what a morning pull is, which could be very healthy, or what disaster could be, ensuing. That's the thought that you have to battle with as a trader in the morning. Is this pull death? Or is this pull, I'm meeting this pull and it's just going to regain its trend because, your risk is still intact. So in theory, this is just a higher low or just another low that holds the 60 level. Again, showing me how important this 60 level really is. Instead of allowing that to happen, I did take the loss kind of instinctively, and I paid the price, not in a cost of I didn't take a terrible loss, but it was a opportunity cost because this would have been a nice 5-figure trade for me had I not sold in the first 5-10 minutes. So great trade plan, great entries, great execution, at least on the front side of things. It's really that last 10% that I botched. And it's upsetting because, I think the chart was really good. I think, the patience and the entry and the thesis and why it would break out, the way that it broke out, where it came from was all very good. And it worked out very well. It's a very solid, gain from 60. And I don't really think about these things in percent gains, but just from 63 to 84, which is the high today, is pretty darn good. From a risk reward standpoint, it's absolutely stellar. It's decent. It's great though. it definitely pays for a couple losers. So overall, great trade idea, great execution on the front side, backside. I botched it, and look, I'm a real person too. I make mistakes. This was a costly one in terms of my sanctity and my sanity, knowing how bad I botched it in the morning. Like, even when I took the loss and this was a red candle in the morning, all I kept thinking was, is this dead? Or does this have every single reason to still be fine in 30 minutes? And unfortunately, it was the latter, and I couldn't get back in because I was just a little bit mentally scarred with, how much work I had done to accumulate for a whole day, and I allowed 5 minutes of price action to completely ruin a whole day's work of effort. And that is why trading's difficult, and it is more than just, chart patterns and entries. Like, there's a whole emotional side to overcome. But first and foremost, what people have to learn is how to find the right situations, find the right catalysts, and then figure out a way to build into the right risk level. And that's probably step one. And then following your plan is probably the harder step, but also the easier step, and that's step two. So that's my AEI trade. That's my trade recap on it. It netted me a loss, but I'm still pretty proud of the thesis, the execution, and the results. That could have been, and I'm excited to do it again on the next trade. That's it for me. I'm Mike Huddie from Huddie&Dom.com. If you guys want more of these types of trade recaps and video lessons, the place to find us is Huddie&Dom.com. We do twice a week webinars live during trading hours where you do get to see our trade recaps, our live trades, our thoughts, our emotions, our market sentiment, all that good stuff. Dom and I have been trading for 6-7 years now. We're just trying to, share our experience, share our journey with you, and hopefully it helps you somewhere along your journey in the stock market. Have a great rest of your day, guys. See you next time.